Welcome back to the explainer for day 17 of the 100-Day Wealth Challenge from FinFlow Media. Today, we're tackling a total game changer. An absolute foundational pillar of personal finance. We're looking at Roth IRA versus Traditional IRA, the tax-free wealth strategy. Choosing between these two? Well, it's easily one of the most critical financial decisions you're going to make, especially if you're in your 20s or 30s.
And look, the source material lays out the stakes perfectly right here. If you're investing money without using a tax-advantaged account, you are, quote, literally giving away free wealth to the government. No way around it. Those are some incredibly high stakes, right? So our primary goal for this explainer is super simple. We're going to break down the exact differences between these two accounts so you can finally stop giving away that free wealth and keep way more of your hard-earned money.
Okay, let's dive right into this. Section 1, the core difference, timing.
So, what does this actually mean? Well, the single biggest difference between a Roth and a traditional IRA comes down entirely to the timeline of when you actually pay the IRS. It's basically a choice. Pay taxes today or pay taxes in retirement. And honestly, that one simple shift in the timeline, it drastically changes how your wealth compounds over the years.
Moving on to Section 2, Traditional IRA, deductions now.
Let's walk through the actual life cycle of a dollar when you put it into a traditional IRA. Step 1, you invest pre-tax dollars. Since you're using money before it gets taxed, that leads us right to Step 2, you lower your taxable income this year. You literally get a tax deduction right now. And hey, that's a fantastic upfront benefit, but we've got to look at Step 3. When you finally retire and start pulling that money out to live on, every single dollar is taxed as income. Basically, you haven't escaped the tax bill, you've just delayed it until retirement.
All right, Section 3, Roth IRA, tax-free growth.
Now, what's really interesting about this is how the Roth IRA flips everything we just talked about completely upside down. It works in the exact opposite way. Let's trace that same dollar's life cycle here. Step 1, you invest after-tax dollars, meaning you invest money you've already paid taxes on today. Because you've already paid up, Step 2 is that there's no immediate tax break. Your current taxable income this year doesn't budge. But wait, look at Step 3. This is the ultimate payoff. In exchange for biting the bullet and paying taxes today, you get 100% tax-free growth and tax-free withdrawals in retirement. I actually want to pause here for a second, just to really emphasize what our source text literally calls the magic 100% tax-free. All of your investment growth and all of your future withdrawals in retirement are completely tax-free. Every single dollar that account grows by over decades and decades is yours to keep. You owe absolutely zero taxes to the government when you take it out. That is just incredibly powerful.
Which brings us to Section 4, making your choice.
And this brilliantly illustrates how they stack up. Having a side-by-side mental model makes everything click. Look at the initial investment row. It's pre-tax for traditional, but after-tax for Roth. How about the immediate tax break? Yes for traditional, no for Roth. And the big one? Retirement withdrawals? They're taxed for traditional, but entirely tax-free for Roth. When you map it out like this, the whole decision process becomes so much clearer, doesn't it? So who actually wins with a Roth IRA? The source material gives us a very clear answer on this. If you're a young investor, or if you're currently in a lower tax bracket, the Roth IRA is almost always the clear winner. Why? Well, think about it. You're paying a really small amount of tax right now while your rate is low. And in exchange for that tiny upfront cost, you're letting decades of compound growth accumulate completely 100% tax-free. It's like planting a seed, paying a few cents for the water today, and getting an entire orchard for free later on. To wrap things up, I want to leave you with a bit of a challenging question. Will you let taxes silently erode your financial freedom? You've got the knowledge now to make the smart choice. Choose the right account today so you can protect your hard-earned wealth. Anyway, that wraps up day 17 of our explainer here on FinFlow Media. If you want to build wealth the smart way, make sure you hit that subscribe button, drop a like, and return right back here tomorrow for day 18 of the Wealth Challenge. We'll see you then.